Welcome to Know How series. This is part 4. In this one, we're gonna learn about stochastic RSI and how to use for your trading. My YouTube videos are posted on Nifty 50 chart trader, so please like and subscribe over there. Quick introduction about topics. So in this video, we'll learn about stochastic RSI. We're gonna explain it, how it is used. In second slide, we'll see stochastic RSI, what kind of signal it gives you for your trading. And the last ones are a couple of examples from our day-to-day life, which can help long-term investors, short-term, as well as futures and option traders. And finally, we just conclude for what we learned so far. So as you see on this deck, stochastic RSI is a combination of two indicators, that's stochastic and RSI. It's an enhanced version to analyze your price movement and show you overbought, oversold conditions in one indicator. In simple terms, it helps you to analyze closing prices of a product in relation to its highs and low. 14 days is a default value, which you can customize as per your trading. Given chart over here describing difference between stochastic RSI and stochastic RSI. So we'll just go through quickly. So meaning stochastic, it's a comparison with the closing prices for a period of time and indicating where there are trend reversals. So that's why this particular indicator is useful. Whereas relative strength index RSI, based on your closing prices or the price movement, it indicates whether it's a overbought or oversold condition. So when you combine two, stochastic RSI, it's a combination to identify one overbought, oversold of price, as well as it gives you potential trade reversals. Signals. So signal range between 0 and 100 for stochastic value. If it's above 80, it indicates overbought, and if it's below, then it indicates oversold. Again, these are just a signal. It does not mean if it goes above 80 and if goes below 20, you should immediately start taking position. 8 indicators you can start taking with small quantity. Same in RSI, signals are between 0 and 100, so value above 70 shows you overbought, as well as below 30 indicates oversold. It also gives you a trend reversal. So when you combine two, you get stochastic RSI. So it's a signal range between 0 and 100. So it gives you above 80, it's overbought, and below 20, it's oversold. Objectives. This basically helps you to identify a signals during range bound market. So you know whether trend is gonna reverse and when you can expect to start slowly buying or start slowly booking your profits. Whereas RSI, it just gives you overbought, oversold conditions, same as stochastic. Only it builds you based on the price moments. So again, when you combine two, stochastic RSI gives you two purpose: overbought, oversold, as well as if the trend reversal is happening quickly. Look and feel, as I've shown image, this is stochastic, looks more like a MACD, couple of parameters to ensure if your percentage of normal line goes below of your stochastic line, you should start selling. So more like a MACD, and when it hits 80, you expect that market is gonna turn around. Same as at the 20, if it comes around 20, you can expect market gonna turn around for buying. Whereas RSI, same, if goes above 70 or drops at 30, if goes at 70, it means market is overbought. It will start its trend reversal soon. So when you combine these two indicators in one stochastic RSI, I personally look at this one where if it is above 80, uh, it gives me signal that okay, market price is kind of stagnating and we'll see the trend reversal. So I will start taking position slowly for the confirmation. Same as 20, it gives market is oversold, market now looking for bound. So I'll start slowly buying my stocks as well. I usually tend to avoid if the values are between 80 and 20. That's where market is unclear with the next move. So trying to avoid those values. So in this deck, we're gonna look at how to read the signals. So stochastic range is between 0 and 100, and overbought signals are when it's above 80, oversold is when it's below 20. So as you see in this image, this is Nifty 50 price chart at the top. Then I've added MACD, and then I've added stochastic RSI. Always use stochastic RSI with a combination of MACD and SMA for my trading. How to read signals? So I'm showing Nifty 50, our daily chart. So at the top, I've just drawn a line, the lower lows, higher highs over here with, signs. So lower lows are with the blue color, whereas higher highs with the black indicator over here. I've also added MACD, which is also showing the same, the moment of price. And stochastic is at the bottom. So the way I look at the signals is for stochastic, as you see, when it touches below 20, that's where I'm also looking. MACD is also at its bottom, and that gives me comfort that now market is looking for low lows. It is now gonna start rebounding. So when it is as the lowest, along with the MACD, I usually start buying in small quantities over here. Opposite of it, when it touches the top along with SMAs I'm using, I just usually confirm whether it's below 250. And as you've seen at the top, stochastic is above 80. MACD is also topping out, at its junction, as well as price is also kind of stagnating over here. So the black arrows also indicate, as you see, stochastic has topped out. MACD is indicating reversal with this, MACD stochastics chart as well, turning from green to red, and slowly your price is also dropping out. So stochastic, when it's used along with MACD and SMAs, it kind of give you indication that now market is whether oversold, overbought, and slowly you will see market trend reversal going to happen. So always use stochastic area as an indicator along with the combination of MACD and SMA. Again, on this one, 80 does not mean overbought. As you see, stochastic is kind of stays in that period for a quite a long. So you, based on your experience as you trade on, starts buying in small quantity or lower quantity when market is out of your bounds on stochastics. In previous slides, we learned about stochastic and signals, how it works. So with the examples, I'm just showing this is an example for equity investor. He's a long-term trader, how they use it. So we learned in the past, I always do the analysis on 2 time frames. So high time frame, I use analysis purpose, and low time frame, that's the daily time frame I will use for my trading. I've added Nifty 50 at the left side. So as you see, price for weekly. I also added MACD and stochastic. So based on learning, I'll just pick up the examples. So as you see, last October, market was topping up. It kind of price was exhausting. MACD was also at highest, and stochastic was also range bound above 80. So this is an indicator where we can simply say, market is now kind of price exhausting, and we'll see the trend reversal. So this is a sign where I will, slowly start selling or buying puts for my trading strategy. Same in month of April, prices kind of stuck down. We see lower lows on Nifty price. MACD is also kind of exhaustive and showing a sign of trend reversals. Same with the stochastic RSI, we can also see when it remained below 20 for quite a period of time when prices were coming down, MACD was kind of also falling, you will see stochastic was below 20. And as MACD has turned out, prices start picking up, stochastic is also showing of recovery, and it again went from 20 to 80. Once we analyze when to buy and when to sell, as you see, I'm just showing blues where the prices were at the top, so as the black arrows where the prices were at bottom. So analysis October market start dropping. We can also confirm with the SMAs as well as MACD indicator. So when the market is falling, you're seeing stochastic has gone below 20. Again, over here, it does not mean you should start immediately buying all or deploying all your capital. Wait for the signals because this is a indicator you need to use along with SMA as well as price MACD indicators. So over here, as you see, MACD has completely turned around. This is a first buy you can do over here. As you see over here, price is also touching 200 EMA. Then market has stopped out. If you have bought it here, you can do the booking profits over here. And again, as MACD moves along with the use of stochastic indicators, you can do buys as well as sell over here. Always use stochastic along with MACD and price action. Usually the signals are when MACD is at the top, stochastic is at the top, as well as price is showing exhaustion. That's when you sell. And same as when the price is at the lower lows, MACD is also showing sign of recovery, whereas stochastic is also below 20. You can also start buying slowly over here. I usually try to avoid the values if these are between 80 and 20. In this deck, we're gonna learn how to use stochastic RSI if you are a day trader or using options. So we always analyze on hard time, that's the daily time frame, and then we'll try to trade on hourly or minutes time frame. For demonstration, I've added Nifty 50 daily chart at the left side. I've also added MACD and stochastic RSI at the bottom. In the right side is the same strategy at hourly, MACD, and stochastic at the bottom. So how to analyze, as you see, showing the amber arrows to indicate when the market has been at the lowest part, as well as showing the blue ones when market has stopped off. So just taking one example, as you see, price is showing low lows. MACD is also showing signs of kind of recovery from the bottom, and stochastic is below 20 and now showing signs of a, recovery going into upstream. So this is a time when I will start buying my options or call options for my trading. Again, this is just a one example I've picked up. There could be a lot of different scenarios, permutation combinations, which will be indicating whether to buy or sell. Another example is market is at top over here, price is showing exhaustion along with the SMA is still below 200. MACD is kind of also exhausted. Stochastic in MACD is showing now negative signs turning from green to red, and MACD is dropping. Whereas stochastic RSI is now coming off the 80s and showing a sign of kind of weakness and falling towards our uh, s- overbought. So over here, we'll try to start buying puts or start selling calls at the high level. So once this analysis is done, in the early, as you see, always try to match my low lows at the prices, MACD's low lows, and stochastic below 20 as my starting buy point. And same opposite, if I wanna sell at the top, I will always go with the prices showing exhaustion in my hourly charts. MACD is kind of showing exhaustion as well. At the top is kind of trending, and stochastic is above 80 showing sign of oversold. One thing to remember, as you see, MACD is taking a lot of time since it's a daily indicator, so it might gives you a false signal. So try to use stochastic. Usually, stochastic gives you a quick signal where to buy and exit. So keep the MACD as a passive indicator, whereas in futures and options, stochastic is favorable to show quick signs given options moves quickly. It gives you a quick idea whether option is now overbought and oversold along with the prices. So it helps you to buy as per the price movement. To conclude, uh, always use stochastic RSI as a combination of price, SMA, and along with the MACD. Always use as a top-down strategy. Use it as a guidance tool and not only as a single indicator where to buy. And so, stochastic RSI in general, use your signals. If it's overbought, gives you value above 80. When it's oversold, gives you value below 20. It also gives you when the trend is reversing. Preference from mine is avoid new position when stochastic values are in between, and always open and exit your positions in small quantity when stochastic MACD as shown in previous examples, giving you signals. So once you start getting the profits, then you can slowly start building the position on top of that. I hope you like this video about stochastic RSI, so please like and subscribe. My videos are on Nifty 50 chart. We'll try to give you more know-how series and keep your trading simple. And I wish you to be a successful trader. Thanks.